Okay, great. I have rejoined and the recording is in progress. So thank you for your patience, everyone, while we got all set up. I would like to welcome you to this Blockchain at UBC monthly research talk. We are coming to you from the traditional, ancestral, and unceded territory of the Musqueam people. And we're very grateful to be coming to you from these territories that have been used for centuries by the Musqueam for learning. So this is an ancestral and traditional seat of learning for the Musqueam, and they're sharing this territory with us. So we're very pleased to be coming to you today to present crypto, Web3, and Coinbase. And I have a little bit to say to introduce our speakers for today and give you some context on the talk. So Coinbase was founded in 2021 by Brian Armstrong. It's the largest cryptocurrency exchange in the United States by trading volume. If you didn't know, today we're very honored to have leaders from Coinbase share with us their vision and practices regarding Web3, blockchain, and cryptos. First, we're going to have Dinek Kotil. I hope I pronounced your surname correctly, Dinek?
Yeah, all good, Vicky. Yeah.
Yeah. Dinek is the engineering lead for Crypto Applications and Protocols at Coinbase, where his team owns building platforms and applications for enabling about 68 million users now to utilize their cryptocurrencies through DeFis and dApps. Prior to Coinbase, he led the database insights platform in AWS Aurora and RDS, and he's also worked for over 7 years at Microsoft, where he led teams in Microsoft Bing, SQL Azure, and Office 365. We also have Nemil Dalal here today. Nemil is the head of crypto at Coinbase, where his team connects Coinbase's users to blockchain. And under his leadership, Coinbase doubled the assets on the platform and launched its first decentralized finance integrations and released Rosetta, a cross-blockchain API standard used by leading blockchains. And he previously ran Coinbase's USDC team. Nemil received a BS in electrical engineering and his MBA from Stanford and is a graduate of the Y Combinator Incubator. So welcome. It's wonderful to have you here today, Dinek and Nemil. So without further ado, over to you, Dinek.
Thank you, Vicky, and glad to be here and super excited to talk about the Coinbase and crypto and Web3. So before we kick off, a quick note from our legal friends: all the conversations here are for information purposes and should not be construed as any legal or investment advice. So let me start by kicking off, by saying that it's an interesting time in crypto, right? And if you look at the crypto economy, it grew from about $600 billion to about $2 trillion in the last 2 years. DeFi ecosystem grew from about $12 billion to about $134 billion in the last 2 years. And it's fairly common to see like NFTs or like virtual lands being sold for several $1 million, right? On the flip side, we also see hacks happening every now and then, with hundreds of millions of dollars being lost by protocols. So truly, it would be an understatement to say that it's an interesting time in crypto. Let's go back to where Coinbase started. So Coinbase was founded in 2012 by Fred and Brian with this idea of really making it easy for users to buy and sell Bitcoin. It really started with the wallet experience for customers. And then since then, the company has grown to support like 89 million accounts, 547 billion crypto traded, 278 billion under custody, and more than 3,700 employees globally. It's been a remarkable journey for Coinbase. And as you might have heard, Coinbase is a mission-focused company. So what is our mission? So Coinbase's mission is to increase economic freedom in the world. So the concept of economic freedom is very intentionally chosen here, because economic freedom is actually something that is tangible, it's measurable, it's well-defined. There are organizations across the world that measures economic freedom across all the different countries in the world and give a score. And what we have seen is that countries with higher economic freedom scores have higher life expectancy, literacy, growth rates, happiness, environmental health, and so forth. And similarly, there is a negative correlation to infant mortality, corruption, unemployment, war. So truly, in a broader sense, economic freedom is an actual indicator for human and economic progress across the world. And that's the mission of Coinbase, is to increase the economic freedom. So how do we do this? There's three strategic pillars in which Coinbase is investing to achieve this mission. The first one is crypto as an investment. So if you look at the consumer behavior today, crypto as an investment is still the first use case that brings in a lot of customers from traditional financial systems into crypto. So Coinbase would continue supporting all the different assets that's available out there for customers to buy and trade them. It would keep building like institutional infrastructures, allowing institutions to bring in crypto investment. And finally, making our services available across the globe for users to use them. So that is crypto as investment. Now, once you start holding cryptocurrencies, at some point you kind of transition to utilizing them. So what do I do beyond the trading and selling use case? So that is crypto as a new financial system. So things you can do in a traditional financial system, you should be able to do that with crypto, and that becomes a new financial system. So Coinbase supports DeFi, payments, earnings, borrowing, lending, and anything that help users utilize them as a new financial system. And the third pillar is app platform. We know that the crypto economy is not comprised of just one company like Coinbase. There is many crypto native companies founded every day and who's trying to push and improve the crypto economy. So Coinbase continues to invest in the crypto economy by investing in these companies through venture investments. We also want to externalize our offerings to other crypto focused companies who can use us and quickly build those crypto experiences up and running. And the third thing is surfacing apps, third-party apps into Coinbase experiences so that customers can use them within the Coinbase ecosystem and Coinbase experiences. So those are the three primary strategies that Coinbase has employed to achieve the vision. Now let's start here from Nemil on why crypto. So Nemil.
Thanks so much, Dinek. And hi, everyone. Super excited to talk to you. Just really quick background on myself is I've been in the space for about 8 years. And so it's been a tremendous amount of change over the course of those 8 years and what crypto was. When it started, the entire goal was a payment system. And the goal was also to replace the US dollar. Those are like early goals for Bitcoin specifically. And in the years since, we've had a huge flowering of different smart contract platforms, which have allowed a whole different host of different types of use cases. So things like NFTs, very different from the earliest years of crypto and what the goals of Bitcoin at the time were. So what I like to do is always ground everything when we talk about crypto and the value propositions of why is crypto so interesting, why is it so valuable? And so if we go to the next slide, these are a few of the core things that really speak to the potential of crypto. One is that it's open. And what I mean by that is if you think of most of the world, in terms of financial services especially, it's a permission system. That is that you have to have access, you have to get approval from someone, and then you have access to a financial system. Just like the internet really changed that model, media, in the 1960s, you might have to go to a media organization and convince them and talk to them about being able to get access to, be in the news or to be able to get a message out. In the same way, the internet really disrupted that, right? It allowed everyone to be able to be their own printing press, their own publishing model. And so in the same way, I think that's what's happening. Crypto is doing to traditional financial services, which gives permission, suddenly open. This is combined with the fact that it's global. So that means that in one country, the financial system may look very differently from another country. But the power of this is that you can launch something and anyone in the world, wherever they are, has the ability to access it. And again, I think the best analogy for both of these is the internet in terms of what it was like before it, what it was like after it. So that's maybe the core foundational piece that I always really like to drive home. Then I think there's some other things that we can layer on top. So like one is the fact that regulations are going to be different. So even though the functionality may be the same, the regulations around that may be very different. And so I think similarly on the internet and with traditional media, there are regulations in the 60s about what could be published, what could be presented. And today there's a whole different set of rules around that. Again, I think this is an area that we're still developing. But in the same way, the traditional regulations may look very, very different for this system. And so as a result, the outcomes will just be different. And one analogy that I often talk about is like Uber versus what came before it in taxi cabs. So there's a certain set of regulations on taxi cabs. When Uber came about, for both good and bad, I think there are a whole different set of regulations that we're confronted with, and that just led to very different sets of outcomes. The other sets of things that I think we notice are composability, is that you can build on top. So if you're an engineer, whenever you're building something, you're constantly using the code of others. And so I often think about when I'm doing a Node.js app, I have all these NPM dependencies, tons of other people have built stuff, and candidly, I'm doing a very tiny fraction of the things that need to be done because a lot of other people have done that. That's the power of a lot of what's happening in crypto. People are building foundational layers. People are able to build on top of that and build on top of that and build on top of that, attacking specific use cases rather than having to build that whole thing from scratch. And that's a really huge difference as well from a traditional financial system, which might be that you have to build this thing on your own, then you have to build something else on top, then you have to build something else on top. And the other aspect that's really interesting is I had the experience of working in a data center for a large US bank. And this was all technology from the 1960s, and this was in the 2000s, all technology from the 1960s. So a lot of COBOL mainframes. And candidly, it was very difficult if you're a modern trained developer to be able to work in a stack like that. You basically have spent years learning that, and a lot of it's pretty antiquated. And so the power, again, of the blockchain is that it's programmable. Anyone can any developer is able to like look at the code, modify it. It's a little bit more modern as well. And so that really means that the expressible like, canvas of people able to build on this is really great. And then lastly, and probably one of the most foundational shifts that Bitcoin did was letting people create scarcity. So maybe the initial insight of Bitcoin was that it was the first time, I think, in history that we were able to have digital scarcity, which is that a creator creates something digitally. Before that, you might create it in a database, but you can always go back and edit it, right? And in the same way, the Fed can decide to print a certain amount of money, but in certain countries, it can print more because, hey, there's a lot of value for the government for doing that, maybe not as much for the people holding that currency. And so the power of this crypto approach is that you can create certain rules. Once you write them, you can't change them. And that has some huge benefits and also some disadvantages, from a security standpoint. But again, this is, I think, another really powerful value proposition in crypto. So I'll pause there, see if there's any questions. Otherwise, I'll go on to dig into a few of these areas.
Well, you just go ahead. I'll invite participants to post their questions to the chat, or we will open up questions towards the end. So yeah, please go ahead.
Okay. Well, I think the thing I always reflect on is like, I think it would have been amazing if I was still in college now, or if I was doing my master's or my bachelor's, because the potential power of someone at the dawn of the space to be able to build something is just tremendously powerful. So like an example for a lot of spaces is the early years, there's a lot of room for growth. A lot of the simple ideas have actually not been tried, and people haven't thought too deeply about that new canvas that they have available to them. And I think we see this, everything from the start of the radio to the start of the TV to the start of the internet. I think this is a similar moment in crypto. So one example I just talk about is like, what might things be done in a more traditional way versus how it might be done in a crypto way has been, here's a bank. If I want to create a bank, you have a business plan, you probably have to have like very specific degrees and certain qualifications, and I have charter and insurance, there's lots more stuff, and then users can deposit into my bank. And a DeFi protocol, I might have 3-5 developers, a large smart contract, and users deposit. And again, it's not to say that like this is necessarily safer. I think that over time, we're still developing the norms to keep funds safe. And so there's a lot of hacks in DeFi protocols. But the fact that these are just so different is pretty powerful in terms of being able to create something and let the world be able to interact with it. And so just to want to show is like the way, more traditional real world physical model might be versus like a DeFi or crypto forward model. Next slide. And this is some code I wrote in 2016 now. This is a simple bank code that I created on Ethereum. It's in a language called Solidity. Many of you may actually already be programming in it. And so the simple, and the part I think that I really drive home, which I think is the most interesting part here, is that I create this line, it's 20 lines of code, 30 lines of code, but it basically solves what I call this shoebox problem. And the shoebox problem, as I will explain it, is that basically I show up at your front door and I say, hey, I'm super excited to hold your money. Here's a shoebox, deposit it in, and whenever you want it, I'll give it back to you. And candidly, most people would never trust me, especially if I'm a random person, but even if I'm a friend, I think it may be very hard to be able to trust someone because you don't know if the money is going to be there when you want it, right? And that's one of the big foundational challenges of banks. What's interesting about this specific smart contract is once you put the money in, it has no super user privileges. So you put the money in, you directly interact with it, and then you can pull money out. And even though I created this code, I cannot change it after the fact. Again, from a security standpoint, there's a lot of risk with this, but I think the main message to drive home here is this ability where we can create certain guarantees that don't exist in the traditional banking system, which is that I put money in, I don't need a third-party auditor to go verify physical processes or things like that, I basically can inspect the code, assuming that the code has no bugs, which is a big if. But assuming the code has no bugs, I'm able to then take my money out. And that's a foundational change. And again, this is, I think, one of the reasons people were excited so earlier on about Bitcoin, was the fact that you could set 21 million as max amount. And no matter how privileged a position you were in the world, you were not able to change that. So I think that's a really profound change. And so if we apply this, if you go to the next slide, this idea of like what a traditional bank versus like a DeFi bank protocol looks like, you can see like a traditional bank, there's a certain process, certain amount of starting capital, there's an addressable market, there's certain like employees you need. And then there's a DeFi bank, right? And it's much less capital, much quicker to get started, much larger worldwide market. My sense is like, I wrote 100 million, probably it's about 200 million now. And I would probably posit within a decade, a billion plus would be able to access something like that. And so it's a really fascinating moment in time. And this exact like dichotomy doesn't just play out, this is just one product, but it's really playing out across a whole wide range of products in the crypto landscape. And we can talk about, this is like one more directly like financial product, but there's a whole host of other things, including NFTs, that allow the same comparison to the real world, let's say a collectible versus an NFT, or gaming-based collectibles versus blockchain-based collectibles that have similar dynamics. And I think this is the part that's so exciting. Like if I were a student right now, this is why like I would really get excited about like dedicating my career to this, and especially investing in the next years in terms of getting really, really deep in this space. Next slide. I'll pass it over to you, Dinek.
Cool, thanks, Nemil. So I guess like we could get into crypto at Coinbase, and actually Nemil can watch to this more than me, because the crypto team at Coinbase started fairly small with a handful of engineers. We talked about how Brian and Fred started this concept of Bitcoin wallet. So really the crypto team was powering the wallet experience by running a single Bitcoin node to start with, and the node would actually do sends and receives to basically move Bitcoins around. So that's where the team started. And over the last many years, the team's grown to 200 people organization, roughly like that. And we are divided into 3 pillars. So I'll talk about the 3 different pillars within crypto organization. So the first one is the asset pillar. So as I was talking about, the first use cases for crypto is always investment. So it's basically, I want to buy crypto, sell crypto, hold them, make money out of that. So asset team's responsibility is to make sure that all the different assets, crypto assets available in the market are supported in Coinbase, and customers can actually buy and sell and trade them. So what does this mean? This means that the team has to participate in the network to broadcast the transactions. So they manage nodes. And with that comes a lot of challenges. For example, every blockchain go through upgrades. There are hard forks that happens once in a while, and new airdrops coming up. So this team has to deal with the challenges of all these changes that's happening in the blockchain. The other theme that the team has focused on is how do we make it interaction with blockchains more repeatable? So every blockchain tries to differentiate itself. It has a different data contract, a different model to interact with, different parameters. So the challenge for us is that how do you kind of make the interaction repeatable? So for that in mind, and also can involve community in mind, we have this open source library called Rosetta. See, Rosetta is trying to standardize interaction with blockchains. Think of it as in traditional Web2s, you have these interfaces, and then under the interface, you can actually have different implementations for classes. Rosetta kind of followed the similar model, and it allows for asset issuers, if you're a blockchain owner, to come back in and add like a specific implementation for a particular blockchain. And for people consuming that, it looks like it's the same interface, same interaction model. So that kind of helps us speed up the interaction model for different blockchains. The second pillar is the wallet and cryptography pillar. So in the crypto world, ownership is defined by cryptographic keys. Each blockchain has a definition for what cryptographic key they support, signing algorithms they support. And wallet is sort of like the abstract concept that holds the key and the funds and allow you to kind of do the transaction fulfillment. So this org's responsibility is how do we support like all different kinds of keys and signing curves? How do we scale to support like trillions of keys? And how do we support like different kinds of wallet orchestration mechanisms like multi-party wallets, single custodial wallets or self-custodial wallets and things like that? It's trying to really push innovation on the infrastructure for cryptography and the wallet infrastructure as well. Now, this is the third pillar, the applications and protocol. Personally, I lead this organization from the engineering perspective. The org's responsibility is to support use cases beyond investment. So as we have seen in the crypto economy and the consumer behavior, we've seen that over the last many years, most users really want to do something with their cryptocurrencies. So this org is responsible for that. So what do? We basically, build services and platform that allow users to generate yield on their cryptocurrency. We do that through staking, through DeFi integration, and we also do provide access for users to connect with either different protocols or with other blockchains. So part of that is layer 2 interoperability and bridging, and open source contributions. So this is the org that we drive, and today we already have things like Ethereum staking, integration with some DeFi protocol that allow customers to generate yield, and you're working on a few other cool stuff. I want to switch gears here a little bit to a bit more broader terminology as Web3. So obviously, one of the reasons why I joined Coinbase personally was just being convinced that, look, the internet technology is evolving in this point, and I really want to be part of the early stages of that evolution. So that is Web3. The evolution happening is Web3, and Web3 has different definitions available in the market. At Coinbase, we've sort of formalized this definition of Web3 as trustless, permissionless, decentralized internet that leverage blockchain. That's how we think about Web3. So what does that mean? So if you look at Web 1s, usually back in the early 90s or late 80s, we had static HTML pages. The experience is usually read-only. You can transfer content back and forth. And then came the Web 2, which is the Facebooks and the Instagrams and the Twitters, where the web applications became a lot more interactive. You can not just read something on the web, but also interact with the web pages and so forth. But in Web 2, the key thing is that the data is still stored centrally, and it is monetized by a service provider. And that's the big shift you're seeing in Web3, right? It's decentralized, trustless, and permissionless. But the key defining feature of Web3 is the ownership aspect. So there's read, write, and full ownership of data. So your identity could be flowing between the different platforms seamlessly, but you still own the data, and no service is trying to monetize your data. That's the big shift you're seeing in Web3. So with that frame of thought in mind, one way to look at Web3 stack is as follows. On the bottom of the stack, you have this protocol layer. So this is the underlying blockchains that start off with L1, and then there are scaling solutions on top of that. And with the rise in L1s and L2s, there also was a rise in bridging to really allow assets to move between the different blockchain systems or networks. So that's the layer 1 protocol. I mean, this is the bare bone bells and whistles, computing power, networking power for everything that's part of the Web3 stack. On top of that, there is the infrastructure category primitive. Think of it as building block or platforms that are highly specialized in doing one thing really well. It might not really build a business in itself, but it's really doing one thing really well. So as an example, let's take a look at Compound or Aave, right? These protocols are really focused on the lending and borrowing experience in a decentralized way. But they use the underlying blockchain network, the consensus mechanisms, and all those things to power them. Another thing is staking, Lido or Staked, it's basically providing staking infrastructure. Another example is Open Zeppelin for security, or Dio Analytics for on-chain analysis and so forth. And then on top of that is the use case layer. This is the layer that everything comes together, right? And you can actually see a business evolving out of this, right? And the use case layer leverages the building blocks under the hood, the infrastructure layer and the protocol layer. So I want to take an example of Mirror. Mirror is a decentralized blogging platform. It uses Arweave as the storage system to store the data and content off-chain. It also uses ETH to give rewards to customers. And it also uses ENS, the Ethereum naming service, to redirect the reward to a particular address and so forth. So similarly, if you look at any of these things in the use case layer, they kind of use a multitude of the underlying platforms and the protocol layer. Right? And on top of that, we have the access layer. So in order to actually get access into the crypto economy and Web3, you need to come through some sort of a wallet. And there are many wallet providers like Phantom, Coinbase, MetaMask, Brave, right? And And even before that, right, there's got to be some sort of an on-ramp which allows you to, like move money from your traditional fiat systems into the wallet. That's MoonPay or Wire. And then there's also like a bunch of aggregators like, dApps, Zapper, and all this sort of stuff, which allow you to have a single kind of a pane to interact with all the different kinds of apps available in the market. So that being said, what are the challenges in Web3, right? So one of the big challenge is usability. So if you have tried to buy and sell crypto or different kind of crypto assets, I mean, you would definitely have experienced the fact that it's not all like, all great experience, right? You got to move from one wallet to the other, from one network to the other. There's gas fees, the wallet idea is confusing. So the usability is not as great as how it should be in the Web2 systems. The other thing is security, as you're talking about, like, there's always a new hack, that we talk about, like, in our weekly meetings. Hey, this hack happened. The latest one being Ronin, $600 million lost from the bridging protocol. There was Wormhole and Beanstack and much more, right? Security is a real concern in Web3 today. The other thing is privacy. I mean, it's true that you don't really know who the user is, but there's sort of like a pseudo anonymity, right? It's not fully anonymous. You know the wallets, the public keys, but there is still some concerns about privacy. And finally, scale is a concern, as you've seen. Like, I mean, when you have a decentralized system and you have to build consensus among a variable number of nodes, scalability becomes a huge factor. And this is the reason why we have like scaling solutions that's trying to improve the consensus mechanisms and making more transactions per second and so forth. So these are the major challenges we see in Web3 today. So finally, where's Coinbase's play? And some examples I want to show here. The first one is Coinbase is working on an NFT marketplace where users, where if you're a creator, you can actually go and distribute your NFTs, and you can mint it, create it, sell it. And if you're a user, you have a single place, a single pane of glass to see all the different kinds of NFTs and interact with them. So that is something that Coinbase is working on. The second thing is our wallet experience. We try to make our wallet, our goal for our wallet is to make sure that it's super easy for our users to interact with Web3. So we have different kind of wallet offering, and we continue to push the innovation on the wallet front. The third one is the direct integration with different DeFi protocol. So as an example, we've done an international launch for compound DAI interaction to generate yield for customers. And these are a few examples. We have a lot more going on, and there's also this idea of 10% projects and innovation happening in Coinbase too. Let's move to reflections, Nemil. I would love to hear your thoughts on this section.
Yeah, so Dinek, I think we've been around the space for a while. I think one thing I often joke about is like, there's people who've been through one cycle in crypto, and there are people who've been through multiple cycles, and your perspectives are just very different, right? Because you've seen the ups and downs. So like, just for context, I've seen like ups of like 10, 20, 30x, and then downs of like 90% plus. And it can be exhilarating and deflating in different moments. But I think one of the core maybe lessons from that is that we often talk about, like in microprocessors, I was an electrical engineer, about Moore's law. So this foundational law which dictates the growth of transistors. And the way I think about it in Bitcoin is these price cycles, or this foundational thing in crypto. And what I mean by that is that in the upswings, you have a tremendous amount of different folks coming into the space. So I'd be surprised if many folks who are learning about crypto today and Web3 today in the world would have done that if the price had stagnated for many years. Instead, what often happens in this space is the price goes up. So a lot of people get excited. Specifically, what that means is like people are buying more crypto. So users are there. Two is developers get super excited because they're building things for these people who are buying crypto. A lot of media sources start covering it. So that acts as another area of people just coming in and getting more excited about it. A lot of companies get interested about integrating with crypto at that point in time. So for example, 5-7 years ago, I remember all the major banks, a lot of my friends back in the day worked at banks, were just looking down on Bitcoin, looking down on the potential of decentralized technology. And now almost all of them are like, I think they're running scared, is what one of my friends who was working with a bank recently told me. So I think the things that are interesting are the price of crypto, the price of Bitcoin. It's this really powerful like onboarding mechanism where people around the world are suddenly getting excited about crypto, getting in. And I think that has its own downsides as well, is that often means the price skyrockets, and then there's some type of catalyzing event and people start pulling out, so you can see that. But I think ultimately what we're seeing is that the growth of this, I'll give you examples. In 2016, I was just so convinced the world was going to use smart contracts and everyone in the world was going to adopt it. But I always struggled at that time to think about how would we get people to use it. And my thought was, oh, we create something as utility, people start adopting it. And what I realized was the way this space often works is that the price going up gets a lot of people excited about it. A lot of investment flows in, people flow in and capital flows in, and then people build from there. So I think, anyway, just one like foundational thing that I've noticed about this space, and I think that's going to continue into the future. Next slide. I think I'll pass it to you, Dinek.
Yeah, I think this is one of the most fascinating things that I've noticed in the last 8 to 9 months that I've been looking at the monetization growth for crypto. So there's a lot of books, there's a lot of articles written on monetization of a commodity. There's different phases to that, how it takes time to monetize any commodity. But something interesting happened to me back in the last Halloween. If you have kids, they go to school and it's a candy fest, right? Like, they get a lot of candies from school. So, usually they bring back in these gold coin candies with a dollar sign on it. So this last Halloween, my son brought home like a Bitcoin gold coin, right? Like a gold chocolate. So he brought that back home and he said, Dad, I didn't eat it. I want to show it to you. It's actually a Bitcoin chocolate. So it shows to me that, look, the market is changing. I mean, like, even like chocolate manufacturers are actually building these Bitcoin, chocolates. So it takes time for monetization to happen. It's slowly happening, surely happening, and the data itself proves that it's actually happening. Nemil, back to you. Nemil, you're on mute.
Sorry about that. I noticed that in the early years, almost exclusively people would think about crypto as a financial technology and specifically payments only, rather than other parts of the financial stack. And I think the big, lesson that definitely the last year and a half to two with the growth that NFTs has shown is that it really is an internet for ownership. It's not just payments, it's not just currencies, and it's not just finance. And the reason I like ownership is that basically it's a ledger, which lets you in a decentralized way be able to say who has control or ownership or some super user privileges around some form of digital assets. And that can be applied in a whole host of different ways. So I think interesting things to think about are, I know we spend, like historically, crypto spend a lot of time on the DeFi side, on the financial services side, but I think the area that I'm really personally excited about is the gaming area. And there, I think we have massive economies as well. And I think that the power of digital scarce goods, NFTs, the potential to use NFTs across games, and to be able to own that even after you played the game are all really interesting parts of what crypto can enable and what Web3 can enable. So I'd say Web3 is this broader vision of like an internet for ownership, an open access internet for that. And it's going to be much further beyond financial services. And the thing, it sounds like when I have a slide like this now, this often feels inevitable to me now, actually. But I think that like 3-4 years ago, when I first started like using a terminology like this, I was like, this is the vision for eventually where we want to go to after a long period of time. And I think what I've noticed is that I think at maybe just 2-3 years ago, there's about like, I think 10 to 20,000 developers who are working in this. And there were, I think, just a year ago, Coinbase like had about 50 or 60 million total users. And so as a result, like, just want to say is that like tremendous amount of growth. This feels to me inevitable that at some point we'll get here. And I think the biggest thing that's missing, and maybe this is the point to leave the talk, is that we need millions of developers. Like if I look at how many web developers there are in the space and how compare that to how many people actually can work on these systems, have a deep knowledge, we have a tiny fraction of what is needed to be able to build this world and economy of tomorrow. So I think that's probably the big maybe last message to land is that we're looking for developers. I think the entire space is looking for developers. And I think those developers will help us build for the next 100 million users, which will then help us have more developers come into the space, which will help us build for the next billion users. Next slide. Cool. Dinek, I'll pass it to you for the final slide.
Yeah, I think, if you have to take one single takeaway from all of this talk, I think it's the fact that we're still at early stages in crypto. And it's a super exciting time, and we're just getting started, right? And it's a great time to come and join us. And we do have a lot of openings. Happy to chat about them. in different areas, whether you are working on front end, back end, crypto, or product management, and all those areas are open, and we have hiring abilities there. So please let us know how we can help in terms of answering any questions. Vicky, back to you.
Terrific. Thank you both. That was super fascinating. And you can see in the chat, there's been a lot of questions. So maybe we'll just start at the top here and we'll just run through the list. So the first one comes from Xu Xiao asking, do you think that ETH 2.0 or proof of stake would fill the usability gap between Web 2 and Web 3? So any thoughts on ETH and moving to proof of stake and its role?
Nemil, do you want to?
Yeah, I'm happy to speak to it. But I think the big things I'd say is super excited for ETH 2.0. I think it's really critical for scaling. So there are a lot of moments when I think that we're using a really tiny, think about a broadband connection versus a modem. That's the way it feels like in terms of the systems we have. So Bitcoin, I think just a few transactions per second that I can support. Compare that to a more centralized system like Visa. So the goal of this proof of stake, goal of ETH 2.0 across the industry, almost all of them are adopting it. One of the core reasons is scalability. The benefits of scalability for a user, I think one huge thing is just price. So the amount you have to pay in gas fees today is pretty exceptional, right? For a retail user, for a period of time, I think you're basically priced out of using the Ethereum blockchain. It's often $30 to $50 to $100 to be able to do a transaction. I remember over one Christmas, I think I spent $200 to do a compound deposit and withdrawal on that protocol. So I think this is foundational in terms of usability to be able to drop the fees. I'm skeptical beyond that, that usability will be changed that dramatically because of proof of stake. I think there are other things that we're doing for sure that will help with usability. But I think that the primary thing I'm seeing from the proof of stake side is scalability and price in terms of the gas fees that you're paying.
Great. Well, thanks for those insights. Yeah, definitely. I agree on the scalability. We'll see, what people sort of feel about the security side of things and, how that all lands. Could look a lot like Bitcoin and the Lightning Network, maybe after, where we have as sort of proof of work anchor, and then, proof of stake layered over top of that. Who knows, right? Anyway, you guys have seen a lot of coins. I'm curious to know what you think are the main factors that drive value price of all the coins you've got. So many listings now on Coinbase, so many coins that are available. And, Nemil, you yourself have brought a whole bunch in to the ecosystem. So what are you thinking? What's your decision making on which coin's going to be worth it and what's going to have value?
So I think there may be two ways we can think about this question. One is what are the factors to drive value and price? And candidly, even though I've been in the space for 8 years, I know very little about what drives price mechanics. I can posit certain things that I've definitely seen in the marketplace. But candidly, it's not my forte. It's not like I'm an investor first and foremost. I'm more a technologist and a developer. I think some of the things that I saw, the ones that I think got me most excited, things that have go after interesting problems with some novel technological benefits to them. And candidly, a lot of things that are popping don't have those novel technological benefits. A lot of them are derivatives of things that are out there, the different communities. But I think the things that for me were always more exciting were the ones that have some technical innovation that they're trying for. So for me, Ethereum was actually one of my earliest holdings because it was just about to launch, and I was like, this is really cool because it's layering in smart contracts and making a JavaScript interface to that. And so I saw that as a value proposition that was very different from Bitcoin, which anyone who's tried to script Bitcoin, it's basically a stack-based language, which I think I think some electrical engineers I know still learn that because of microprocessor design. But beyond that, it's not something necessarily the average developer learns. So those are the types of things that I personally look for, is with those differentiators I get very excited about. And candidly, there have been a lot of duds. I've gotten excited about certain forms of technology. I think Grin was one example back in the day, whereas privacy, I thought, privacy is a really critical thing. And that's one of my worries with blockchains, is that they're open access, they're transparent, some great benefits of that, but also some downsides, right? It means that I can track transaction history for folks in the world relatively easily. And so I think I got excited about that. I think that was an asset that did not succeed necessarily, but I was also just very excited about people who try to go after privacy. So maybe that's my personal answer to that question.
Yeah, Dinek, do you have anything to add
Yeah.
to what Nemil said?
Yeah, I'll give you my perspective again. Like what I've realized, it's really hard to predict, these price points for different currencies. So I put on more like the way I look at it is, it's an economy. So there's like there's developers on one side, there's users, and then there are technologies and there's businesses, right? So I look at which technologies have the potential for growth in business for users essentially. So as a developer, I put on my developer hat and I'm thinking, can I build an app on this? And what is the value prop if I build an app on this? What's the coverage of users I'm going to get coming into this app? So if you have a big network, that's a huge price point. Yeah. And if you have if you're solving scalability, that's a huge thing. If you have lower gas, that's a huge thing, right? And particularly exciting for me is how the evolution of the underlying blockchain technology is going from proof of work to Ethereum's smart contract and EVMs into application specific blockchains. So this idea of you don't need to kind of put all your traffic into a single blockchain network. Let's just each app be its own blockchain, right? So things like that kind of innovation excites me, and those are the ones I keep an eye on, where there is a technical innovation happening. Yeah.
Yeah, cool. Thank you both for your insights there. A question from Misha, just asking anything generally about Bitcoin Lightning Protocol that you might observe or see important as being important.
So maybe I'll take this one, is that first, for folks not aware, the Lightning Network is basically a layer 2 network on top of Bitcoin. And I think they're the sets of advantages that I think are really interesting are, one is much lower fees, which is especially important in things like microtransactions, low dollar value transactions. Two is that a huge part of it is the value proposition of instantaneous payments. So it may seem normal, but normally it's 30 to 60 minutes in Bitcoin for finalization and settlement. So for example, if I send money to your Bitcoin wallet, most exchanges would wait 30 minutes because they're waiting for 2 to 3 blocks at least to be able to make sure that that amount does not get rewritten, and so it doesn't become a potential double spend attack or vector. Power of Lightning is also there is that potentially instant finality, and so as a result, you can use it for real world payments. And I think what's truly exciting about this is that in the early years, as I mentioned, alluded to earlier, Bitcoin and crypto is all about payments. And candidly, in a lot of ways, we've succeeded in very limited fashion on payments. I think it's significantly easier to swipe a credit card, swipe a debit card today, or to use even systems like Swift and others, than it is to use many cryptographic systems for payments, especially real-time payments rather than something like remittances where real-time nature doesn't matter. So that's just some context for folks who may not be aware about Lightning. And then I think what I'll say is I can't speak to one specific protocol integration, but what I'll say is that we have a team that's just looking at different types of layer 2 integrations. Lightning is one example of that. There's also across all the layer 2s. And one of the layer 2 ones that we've publicly announced that we're supporting is Polygon, which is on Ethereum, basically allows similar functionality, but on the Ethereum network. And definitely it's something we're considering. We're considering all the layers protocols and how we can best provide them for our users, just because that means lower gas fees, and it also means much faster settlement for our users.
Cool, that's great. Thank you so much. Andrew Tan asks, how is cryptocurrency developing as an asset class, and where will it go in the future? It's a big one.
Nemil, I can start, and then I think you should chime in. I think the way I look at it today is a lot of people still, institutions use crypto as an asset more from a diversifying perspective. How do I kind of diversify my portfolio and put some of my percentage of my portfolio into crypto so that I can earn some yield because it's volatile. I think long term, when there is less volatility, and more acceptance, it probably become a first-class citizen. That's my opinion. And I don't know what, Nemil, you think.
Yeah, I think that take things. So we are in this crypto, we have this term called Bitcoin dominance. I don't know if you go to CoinGecko, CoinMarketCap, you'll see it on the corner, and it's the percentage of assets that are Bitcoin market cap versus everything else in the space, right? And I actually prefer this other term. I call it Satoshi dominance. And what Satoshi dominance, what I mean is how many of the entire assets in the world, how much of it is available and accessible through market cap on a blockchain, right? And there are examples where we're creating brand new assets, Bitcoin, Ethereum, these are all examples of brand new assets that we've created. NFTs are another example, and they all have some value. Beyond that, there's stablecoins, and that is basically taking real world dollars, putting them onto the blockchain, and we're moving that from a real world only use case to now available on the blockchain. And so to me, what I'm excited about is I think if I looked, I ran my numbers on Satoshi dominance, and it's less than 1% today. Less than 1% of the world's assets are on the blockchain. So what I see over the next 5 years is that we're going to upload almost all the assets that we have to the blockchain so that they have all the benefits of this worldwide accessibility, programmability, all the things that we talked about. So that's at least the way I see the future of assets growing.
Well, the future looks pretty big then. That's great. Claire is asking, is the intention for Web3 to replace existing web browsers like Chrome, Internet Explorer, Mozilla, Firefox, and Safari? So maybe you could like just kind of, give a little bit more detail on Web3, because I think a lot of people are still confused by like, what is Web3 actually? And I know you guys had a great slide on it, but it's still, kind of a bit baffling for people as to what is it actually?
Yeah, and I think it's baffling truly for most people, including me, But I'll kind of share what my perspective is. I think it's really I think the simplest way to think about it is it's really moving away from this single server, central authority owned internet to a decentralized internet where everybody can access it without any permissions. So it's really think about it as powered by blockchain, right? Applications powered by blockchain using internet to make it available to everybody in the world. So it's much more easier to think of it as a characteristics of Web3 versus like, what it is. So give you an example, right? In traditional Web2, if you have worked on any of the big applications, you have a central data center where all the servers are located and the apps are running on these servers, and an organization or a service provider manage these apps. And users usually log into or have to register with the service provider, log in and get access to the application and have certain experience depending on who you are. If you are a wealthy investor, you might get a different experience. If you're not a wealthy investor, you might get a different experience. So really moving away from that into this world of, look, there's no data center, right? All the nodes participating in the blockchain are the data center. And we don't differentiate any users coming in with access, right? Everybody's treated the same. There's no special permissions for anybody. Things are transparent. You can take a look at it. You can see transactions. And you don't have a central authority which can take it down. So if it's existing today, it should exist always. So that's really the concept of Web3. I don't know if it's really replacing, if the goal is to replace the browsers, but it's really replacing the way we think of internet today and the way we think of application building today, right? And at the end of the day, right, you got to access it using some of the form factors you have, which could be a computer, which could be a phone, which could be something else, right? And it ultimately needs some sort of a browser applications running on it. So it could be the traditional web browsers or something else, but you need to have some sort of an interface. I think that part should continue. Like there should be some sort of a form factor to interact with the Web3 stack, essentially.
Yeah, Nemil, do you want to add anything to that response?
No, I fully agree with that. I think maybe the one thing to layer on top is the wallets are just critical to this future world. So like we often talk about the browser wars, right? The 90s, 2000s are all about these browsers competing with each other for mind share, like Netscape and Mozilla and Chrome and Internet Explorer. I think we're going through the next decade is going to be the wallet wars. And the wallet is just a foundational piece. It is combined with a browser, or it's combined with some other app, but it basically holds the funds themselves and lets you discover all the different things that are going out there in the Web3 land, right? So but different apps that you should interact with, where to get the highest yields, what NFTs are worth following. All these things are really interesting things to combine with that wallet technology. So that's probably the thing is like it's not like it's replacing the browser, but I think that wallet is a foundational piece of the future. And it's something that helps be integrated with a browser, as well as mobile apps and others to be able to let users interact with the crypto.
Yeah, that's great. And I really like the way you put it earlier too, is sort of the internet of ownership. Some people call it the internet of trust based on blockchain, but what that trust gives you is the ability to kind of own digital assets, like we used to own physical assets. Yeah. And that's something novel because, ever since we switched to the digital world of, whether it's records, which is what I study, or, artworks or whatever it is, it's been highly mutable, malleable, and double spendable. So we're kind of getting to a place now where we can actually reassert ownership rights, which is quite different. But yeah, totally agree with the wallets being a key on-ramp onto this new internet of ownership or trust. So Trin asks, what are the key differences in governing Web 2 and Web3? What aspects of Web3 governance are most challenging? Okay, so any thoughts on this to either of you?
Nemil, do you want to kick off?
Sure. They're so different today. So I think often the way I think about like a protocol governance versus a corporation governance is like historically, at least, a lot of tech companies were driven by cap tables, early stage investors. You have different rounds. You go public on the stock market, and then people own equity. And I think Coinbase has followed a similar path in terms of its own growth. But I think what's interesting on the Web3 side is that one is that the tokens are distributed around the world. You have access, and you have the ability to vote on a whole host of different decisions that protocol is making. So things I find really interesting today, at least, and I think this may not persist all the way in the future, but today what's interesting is that anyone has the ability to govern and really like go through like really detailed level decisions that are being made. So it's very different from a world where, let's say, Google or Microsoft, publicly traded companies, you're trying to like, you can debate who the CEO is going to be and you can vote on that, but it's very difficult to be able to have like, more specific decisions around all the different things that are happening every day, let's say at Microsoft. What's really different here is that you have on a regular basis, you have transparency. These are all on-chain stats for these protocols. You have the ability to see, on a regular basis, and anyone can create a governance proposal, which is also very different, I think, than the traditional system. Now, again, I think what's interesting today is when all these protocols launch, they all did pretty wide distribution of their tokens. And I don't know long term, like I could see over time, large companies or large investors starting to hold on to those tokens through various protocols and exercise more direct decision-making power, and maybe price out the retail investors who are part of the governance process today. I think that's going to be interesting to observe. But what's really magical today is that anyone can observe it, anyone can participate in it, and through DAOs and other sorts of things, it's like you can literally like not be involved with creating it, join and literally provide your support, get tokens for it, and then vote on where the future that's going, which I think is a very exciting and very different model than we're used to in traditional companies.
Yeah.
Dinek?
Yeah, absolutely. That's super interesting. Dinek, did you have anything you'd want to add to that?
No, I think Nemil covered.
Great. Well, we've reached the top of the hour and that happened really quickly. And so I'd really like to thank you guys for joining us today for the Blockchain at UBC monthly talk, and to all our participants for joining as well. We didn't get to all our questions. So apologies for those of you who asked a question and we didn't have time to get to it. I think that only just speaks to the fact that we would love to have you both back again for a follow-up session very soon. Thank you so much again for taking the time. We really, really appreciate it. The recording will be available after. We'll post this to our website, and also we send it out through the newsletter. So yeah, just a big round of virtual applause for Dinek and Nemil for joining us today and their great insights. And thanks to everybody, and we'll see you next time.
Thank you for having us.
Thanks so much for having us.
Absolutely, our pleasure. Thanks, guys. Bye, everyone.